S&P 500 SPX. Let's get this messy chart blown up in here. We talked about what looked like to us a chance to get up to about 34.03 and then pull back to about 33.48. So what did we do? Well, we got up here to 33.93. So I missed that by about 10 points right there because we saw these fib extension confluences. We thought it would stop there. And right now we made a low in here below my downside target there, but by a little bit. And we're falling very hard right now as we have the S&Ps down 43 points at the moment. And what do I see? Well, you see this pointing to this level right over here around 33.20. You must downgrade that now because look at all the days in here, a whole week. It now comes down to be projected to here just below the 3,300 level and then get another rally again. However, this could get even worse than that and may get into the lower supports down over here around 3250, 3260. So right now we're going to look for this area around 3,300 or a little lower over this next 4 to 6 trading sessions. And don't be surprised if this becomes a bigger free fall than that. This level right over here is the key. If you get below that level, even if you approach it, it would be really bad. And that would be around that 3210 level, 3213. That level right there, can we get that low? Well, it's possible the way they're falling right now. So we're on these 20-day cycle lengths. They look very clear when you see that. So right now we're on around the 15th day or so. So you have another 5 days on the downside likely to come in here. If you get intraday rallies in here, look for them to fail and to move to the downside again. I can't see anything that's going to save what's going on right now. We thought it would, these confluences would hold it, and it didn't quite make it to it, and now we're plunging. So downside is what it looks like to here. Some of the evidence shows all time frames still positive. That means that this modest decline that we're looking at right in here, which is basically 3%, isn't any real damage at this point. I mean, this is still showing us the potential for this to happen again after this decline. The lower this gets in here, the lower these advances are going to project. So we're going to wait and see how low this gets and see where our anchor point is in here. But these next 5 days, they have a lot of risk in it. Now, you can see the slim ribbon starting to roll over, but momentum is still positive in there. So when you have positive momentum and you get an oversold projection oscillator, you tend to get rebounds. You tend to not have a lot of downside. You can see that happened right over here, which was a buy indication. Same thing happened right over here, a buy indication. So this right over here is indicating that the downside is likely limited. You start breaking the supports and get deeper, that's going to change before this turns up. Remember, we look for an upward turn in here before we really get the signal like we had right over here. So we don't have any signal in there right now. All we're doing is indicating that this is slightly oversold. That means it's internally correcting that overbought condition that was in there, and then likely to prevent it from falling in any giant way through there. But until this turns up, there's still a window of decline right in here, and we see that as a risky period over these next 4 to 6 days. As I said, we're going to call this coming week a down week, and then get a rebound, getting down to somewhere around that 3,300 level, and if it gets below there, you still have to start to wonder about that. That is a look at the S&P 500.